Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to India Fintech Diaries, the show where we discuss all things Indian fintech. Today, we start a brand new segment on India Fintech Diaries. The Indian fintech sector is one of the most vibrant ones globally and has been attracting a lot of interest from investors. So we thought we would do a focus series of episodes on how Indian fintech is funded. And to kickstart this series, I'm very pleased to have with us today Sandeep Patil, partner and head of Asia at QED Investors. Welcome to India Fintech Diaries, Sandeep. Great to have you on the show.
Thank you for having me. I'm a big fan of your work, so it's great to be here.
Excellent, Sandeep. Sandeep, you have had an interesting career so far with stints in financial services, consulting, and e-commerce. Can you talk to us a little bit of your background and your journey towards venture investing?
Yeah, sure. So I come from Ujjain, Madhya Pradesh. I graduated from IIT Bombay in 2000. Then have spent now 22 years in various aspects of financial services and consumer technology. Most significantly, I spent 6 years with Capital One in the US and UK, sort of looking at consumer lending, credit cards business, and both in kind of super prime markets and subprime market there. I was an investor with Actis Capital, a growth equity investor with Actis Capital back in 2007, before the 2008 financial crisis. So saw India from that lens, Africa and Southeast Asia as well from that lens, and the impact we had and how the country kind of came out of it. And then, as you alluded, spent a good 5 6 years in consulting. This was right after the crisis, so helping some of the marquee global banks and financial institutions recover from the 2008 crisis. A lot of bank divestitures, a lot of asset wind-ups, capital markets activity, and so on and so forth. And then 2015 to 2020, I was actually in India. I worked 3.5 years with Flipkart in various roles. I led one of their categories, one of the divisions, home and furniture division. Then was group head of strategy when we raised the $4 billion round, held on the Walmart discussions a little bit. And then at last headed the business side of the fintech business of Flipkart. And then the last year and a half, 2 years in India, I was CEO and MD for Truecaller. I assume you know Truecaller most likely.
Yes, Sandeep. Yeah.
So ran that, and then in 2020 I joined QED as the head of Asia, as a partner and head of Asia, to oversee our investment activities in India. Over the last coming up on 2 years, we have made 6 investments. I committed about actually far more than $150 million now, but we haven't done the new math, so I can't tell you the full number right. But yeah, I mean, our investments have only increased our conviction on the country. I had Asia on the whole, but principally I spend probably 60-70% of my time on India, and then 30-40% of my time on Southeast Asia. So that's Indonesia, Vietnam, the Philippines, and Singapore, of course.
That's very interesting, Sandeep. That's quite the journey I've had. Just focusing a little bit of India, Indian fintechs raised a record $9 billion in 2021. But so far, 2022 has been a mixed bag so far. In fact, in quarter one of 2022, we saw actually a 45% decline in funding quarter on quarters compared to the last quarter of 2021. Can you help us understand what's going on in the funding landscape in India? How real is the slowdown in funding?
Yeah, so I think the slowdown is quite real, and it's a part of a larger macro story, right? So US equities market started correcting probably from November last year onwards. And the correction in the first quarter of this year has been very substantial. Last 1 month actually has been a decent recovery. If you look at it, I think NASDAQ is up 25% or something. But before that, there has been a fairly massive correction. Then you have to understand from an equity market perspective, both technology and financial services are high beta stocks, right? So fintech is probably at the intersection of those. And so fintech stocks received a lot of correction in the US equities market, right? So that's one perspective. Then if you think of it from capital allocators perspective, alternative investments, venture capital being one of them, is a percentage of their overall AUMs, and part
Correct.
of that AUM is for emerging markets, right? Where India still sits, it's still emerging
Right.
markets from that context, right? So it's a percentage allocation that you're seeing. So when there's a massive capital movement at the top of the house, even as a percentage, the movement will be quite substantial on the ground
Yeah.
in geographies like India, right? So I see that as more of a cyclical phenomena. There's obviously some structural part of it, but if you take a longer view of it, right? If you look at the story more from 2015 onwards, or even 2008 onwards, I think this is a correction. We'll come back up in the cycle. Probably not as high as 2021. I think that was a
Hmm.
unprecedented peak, if you will, at least not for some time. But I think there'll be a correction, and then the activity will come back much more normalized, but
Right.
much more stable as well, right? So I definitely see there's more cyclicity here than structural correction. There's some structural correction for sure, but there's far more cyclicity here. So that's one lens of it, right? Like purely from where dollars are moving and how percentages are getting adjusted. I think the
Right.
other aspect of the story that one should think about is the more from a growth and evolution perspective, right? And I think there the India story really shines
Hmm.
because the macro factors have never been structurally stronger in a geography like India than historically, and also compared to what is happening in the larger global economy, right?
Yeah.
So obviously one takes comfort in the GDP growth rate and things like that, but the fact that this is the third big sort of crisis in last 2 decades that India seems to be weathering quite pleasantly, if I may say, right?
Right.
Sitting here in Bangalore, you feel hardly any stress that there's a big war going on and there's a massive food crisis and there is commodities inflation. Of course, people are worried about inflation, but it's nothing compared to what, say, for example, has been happening in London and how the
Right.
parliament has been reacting, right? So there's nothing of that nature or size going on here. So the macro story, both from a GDP growth perspective, disposable income growth perspective, that story is very strong. I think financial services story is also very strong. Kind of, we'll talk about regulatory actions, but overall, kind of the financial sector valuations have held up well. Banks have done well. NBFCs have done well. Insurers have done well, and so in from a sector specific perspective, also I think the story is very strong. So if you had a mosaic of sort of countries by sectors globally, I think India and India fintech in particular still outshines what we are seeing elsewhere. So again, that leads me to believe that we are still on the upswing, and our
Okay.
recovery in India will be faster than what you would see elsewhere.
Sandeep, just kind of extending that point, right? What are some of the subsectors of fintech in India that you're seeing that are still attracting funding?
If you think so, again, looking at macro from a lending perspective, I think there's a bit of a pause because people are still absorbing what the extent of regulatory changes that have
Right.
come through. And changes is probably not the right phrase. I think the regulatory actions that have come through, because a lot of it has been restating and reinforcing what was already published, right?
Correct.
But the it's still a bitter pill to swallow, right? Nonetheless,
Yeah.
that sector, there is a bit of a pause. People are thinking about what models will succeed further, and what is the best mechanism and way to fund them for long-term growth and sustenance. But other than that, I think most sectors are quite still looking very attractive. IRDA has come out with some interesting guidelines, and I think insurance is set to attract some good investment in time to come. On the wealth management and sort of brokerage and investing perspective, I think unit economics has not been a consistent focus across all players. Right, there are some players
Yeah.
which have demonstrated phenomenal focus on it, but across all players has not been. So I think there is a bit of realization of that, and therefore realignment of business models. But we see some interesting companies coming up there. So I think that sector is set for a good growth. I think the sector that will probably attract the most capital is tech for financial services and tech for fintechs,
Right.
because with RBI's latest guidelines, it's very clearly delineating the role of regulated entities and non-regulated entities, and I think it's good amount of clarity to come through. But that would foster greater partnerships. Once people are beyond the shock, I think it will foster much better partnerships in the sector, and therefore anyone enabling technology for financial services companies, so banks and insurers, but also technology for people who want to sell fintech products, offer fintech products as a way of monetization, all the way to KYC, ALM, all the core processes that support financial services activities. So tech for that sector will actually be an attractive subsegment to be in.
Sandeep, you talked a little bit of the regulatory changes, and maybe I'll just highlight some of them that have happened. Right, there have been changes to PPI regulations, co-brand regulations,
Mm,
and most recently the digital lending guidelines.
mm,
Now, all of
yeah.
these are going to challenge the fintech models that we have and that were
Mm,
there prior to these regulations. As an
mm,
investor, how do you see these regulations affecting the market? And you talked a little bit about this, so I just wanted to kind of deep dive a little more into this.
yeah. So I think that's it's a whole host of changes, right? In those
Yeah,
uh, three items that you called out. Look, I think there's one has to always look at everything from a bit of context behind it, right? So RBI as a regulator attracts a tremendous amount of respect, right? And the primary
right,
reason is, if you look at last 2 decades, in fact, you can go longer beyond it also. There haven't been any big blow-ups in financial services in India, right? And
correct,
this has been a time when globally the sector has had a couple of blowouts, right? So one holds RBI in a lot of respect for being not only able to protect customers, drive financial inclusion, but actually protect the economics of the sector as well, right?
yeah,
So from an investor perspective, RBI has been over a long term, right, has been a very attractive regulatory jurisdiction for investors to think about. Now, coming to the last set of changes, as I said, a large part of those, right, painting things with a very broad brush, a large part of things that have come out in last 1 month
yeah,
have been restatement and reinforcement of guidelines that already existed before,
correct,
right? So theoretically, no one should be surprised, but the reality is far from it, right? Because people had gotten used to, and when I say people, it's fintechs and investors and other operators involved in the sector, had gotten used to certain models which were always in the gray zone and now have been corrected out, right? And
correct.
that does create a shock for the investor community, for the fintech community in general. I think it's another realization that fintech is quite different from technology in general, because it always operates on the borderline of a highly regulated sector.
Right,
So investors like QED, who have long operatorship background, always knew this, and therefore looked at the sector from that lens, right? But
yeah,
investors who came in fresh and new and were attracted by kind of the fast growth that fintechs were seeing, the vast opportunity it presented, etc., but did not fully absorb the regulatory implications of operating in this sector, might have been affected much more strongly, right?
hmm,
So that would be my perspective on it. That there are some, like, you can't paint it with one broad brush. I think you have to differentiate between different shades of investors and different shades of fintech. The changes
right.
have been not new, but they have definitely been with a strong warning, so as to say.
I think the precise words they used were letter and spirit. So I'm guessing they're looking at more of enforcing it both in spirit as well as the actual letter of what they intended.
Yeah, yeah, and the speed of implementation as well,
Yeah,
right? So it's
yeah,
I think the speed is the because a lot of these fintechs are well capitalized. So if we had a lot more time, then a lot of them would be able to adjust to things much faster. But
right.
the speed with which this is coming down, it might create strong discontinuities for some of
Sandeep, after that interesting discussion on the broader fintech market, let's spend a little time on QED. Now, QED, in my opinion, is one of those rare marquee investors that's almost exclusively focused on fintechs.
them.
Can you tell us a little more about QED and its history?
Yeah, sure. So QD was started by this gentleman, Nigel Morris, who was co-founder of Capital One.
Yeah,
Capital One, if you know, is now among the top 10 retail banks in the US. So it got started in 1989, IPO'd in 94, had 30% earnings growth year on year as a public company for 10 years straight, then went on to buy two brick and mortar banks. So it was an NBFC equivalent, if you will, and then went out to buy two brick and mortar banks, and now is among the top 10 retail banks in the country. A very successful company by any measure. And one would easily make the case that it was the original fintech, though at the time of Capital One,
yeah,
no, fintech was not even a phrase, right?
yeah,
So Nigel was one of the two co-founders of it. He left it in 2004, 2005, 2006, somewhere there, and then started QED more as his own family office. And the kind of one line thesis was that he set aside $30 million. That if I lose this, it's not a big deal. But the main thing I want to do is help other founders avoid the mistakes and absorb the learnings that I have
Hmm.
gained from having started Capital One. Right, so it started fairly small, started with a family office sort of roots. The returns of the funds have been fantastic. The sort of investors knocked down his doors trying to invest into his funds. So fund 4 onwards, so first 3 funds were Nigel's own money. Fund 4 onwards, he started taking external capital. And then fund 4, fund 5, fund 6 is when I joined. That fund closed in 2020 at around 550 million. And then fund 7 is what we are investing out of, which is $1,050,000,000. It closed September last year, so that's the fund we are investing out of. All through the growth story over last 15 odd years or so, there have been a few themes that have been very consistent with QED, right? One phrase that you'll often hear with QED is operators masquerading as investors, and we
Right, right.
genuinely get characterized as that because most of the partners will come with multiple decades of operating experience, right? So I
Hmm.
myself have run P&Ls and balance sheets in financial services companies, and I've done across consumer tech as well. But most partners will definitely have a very long tenure of financial services operating experience. A lot of us actually come from Capital One, so that's a common theme across the fund as well. But we frankly believe that when you are sitting on the board and talking to a founder, there'll be several matters on which you frankly won't be able to advise well if you have not been
Hmm.
an operator yourself, right?
That's very true.
So that's one big theme that's very consistent. The second big theme that's very consistent is financial services. We believe that this is the business and vertical we understand really well, so we limit ourselves to that vertical. Vast majority of our investments have been in banks or something related to lending or banking or insurance or wealth tech, like within those, or technology for these companies. But they're limited to this vertical where we believe we really understand the business model, including regulatory aspects, as we alluded to earlier. But that's something we understand from our backgrounds. So we very occasionally try to venture out of financial services into themes such as embedded finance. So we look at companies where fintech is a significant way for them to monetize, and we look at those businesses. But otherwise, we always stick to sort of fintech as the main theme, as the only thing that we invest in. So that's the second big thing we focus on. I think the third big thing we focus on is sort of capital plus plus, if you will. So we realize that most founders have multiple sources of capital to tap into, and we
Right.
don't recognize capital as a source of distinction. We in fact recognize our expertise as a source of distinction. So most places we go to, most geographies we enter, we actually are welcomed because we come in as the sector specialist. When
Hmm.
most other VCs are locals or are a generalist or global generalist, if you will. So there's a very good handshake to be had with the rest of the ecosystem in terms of the expertise we bring to the table and the expertise they bring to the table, and how we can collaborate to take the ecosystem to greater heights.
So, Sandeep, globally, QED has had some of the most marquee investments in firms like Nubank, Amount, Credit Karma, Klarna, Remitly, SoFi, to name a few. I'm interested in understanding about your India investments. Talk to us a little bit about your investments in India.
Yeah, so we have made 6 investments in India so far. Five
Okay.
big ones are Jupiter, One Card, Upswing, Finance Peer, and Refine. Refine was
Right.
actually our first investment in the country. We have committed a total of about $150 million to the country in a year and a half sort of duration. So we
Yep.
got convinced about the country fairly quickly, and then we went quite deep fairly quickly, even by our own standards. Right, we are
Right.
an independent conviction investor, but even by any objective measure, we have gone with very high conviction. So just talking about the portfolio, One Card. I hope you know many of these companies, but One Card
I'm
of
actually familiar with many of them, but it might help for our listeners maybe for you to
yeah,
quickly give a short description of each.
sure, sure. So One Card offers a mobile first credit card for kind of premium customers in India. So think of like the
Right.
25 to 45 year olds. who already have a credit card. So 80% of One Card's customers already have a credit card. They work with multiple banking partners. And again, very fast growing company. It's a model that we understand really well. So our conviction on this company was very high fairly quickly. We really like the founding team, and we really like the traction they're driving in the market. Jupiter is the second company, which is sort of trying to be a digital retail bank
Right.
for mobile phone users in India. So they are partnered with Federal Bank, and right now they offer a savings account product, which is growing like wild mushroom. Very, very fast growth. They're focusing on what would be the second and third set of products that they would be launching for these
Okay.
customers. Refine, as I said, was our first investment in the country. It offers earned wage access product for blue and gray collar customers. So for blue and gray collar employees
Yeah.
of large employers in the country, they earned wage access. I don't know if you know the product, but it's basically if you have worked for 15 days, then you can
Right. Right.
withdraw a percentage of your 15-day salary into your current
Right.
account for various expenses that you might have to pay for. Again, very fast growth. Also, it's a model that we really understand well from a global investment. So we are investors into WageStream in the UK, Rain in the US, Minu, and Betterfly in
Yep.
LATAM, who all have some version of earned wage access product. Something that we holds a lot of promise to for the middle and kind of lower part of the pyramid in terms of social demographic targeting, right? Then Upswing is providing technology for banks to connect with fintechs and consumer techs. As we were discussing earlier, with the clarification of regulatory regime that has come through,
Hmm.
the sort of swing has actually gotten stronger. We see a lot of demand for what they are building. We just seeded the company in December last year, so they're still kind of building out their first product, a B2B product. It couldn't have hit in a more appropriate market.
Right.
The last big investment is a company called Finance Peer, which provides pay later to parents for paying their kids' tuition fees for private schools. Right.
Okay.
So unlike other pay later products, here the use case is very well defined. It's a unit economics positive product from day one, and something that we believe actually drives a lot of social good by enabling better education for middle class parents.
Sandeep, that actually brings me to my next question, which is a slightly more basic question for you. I think that's
Hmm.
one that many of our listeners might also have. So, how do you go about identifying these fintechs to invest in, and what does the investment process look like?
Sure. So our identification process right now is a lot of it is just inbound, which is
Okay.
people reaching out to us. See, typically our model is to we already have a fairly strong brand in most of the markets we operate in because we are a fintech specialist.
Right.
So where we want to get to is any founder who's thinking of starting a fintech firm, the first investor they should think of is QED, right? Even if we are too early for the investment, we would be keen to talk to them, help them as much as we can, and then evaluate them and kind of invest in them. But so most of our deal flow is actually driven by inbound rather than outbound activity. I'm quite accessible on social media, even over email. A lot of referrals through our existing founders, a lot of referrals through the existing networks, the IIT network, Flipkart network, sort of Bangalore network, tech network in general,
Yep.
the fintech community in general. So the top of the funnel is filled out quite extensively, I must say, by inbound. Then the process is driven by two things, right? One is sort of building individual conviction. So we really rely on other investors to provide us conviction. We go quite deep into the companies to build our own conviction into what they're building. And the second aspect of it is thinking about what would be the best value we would provide to the company, right? So that's kind of working with the founding team to really understand what would be the aspect of expertise that could be relevant to them. And quite frankly, we have declined investments where we didn't think that QED would provide a distinctive help to the company.
Hmm.
I'm sure, like my team must have shared with you, like we have Globally, we have made about 180 odd investments, of whom 27 are now unicorns, right? And so,
Right.
in terms of hit rate, that's a fairly high hit rate, if not exceptional. And the reason for that is we only go into investments where we think we can help the founders in a material and meaningful way. So that's an important bar for us. The investment process typically focuses on three main things to evaluate. There's a bunch of smaller items as well, but three main things. The first and foremost is unit economics. So, what is the smallest sort of atom of
Hmm.
the business that you're trying to build, and at that atomic level, are you profitable? Right? It's
Correct.
not thinking about a single transaction. Is that transaction profitable? But whatever is the smallest economic unit that we can think of that your business is oriented around, can you drive profitability at that level of activity? Right? So that is the first and foremost criteria for most of the companies that we look at. We are actually looking for evidence of positive unit economics. The ideal company for QED is something that started a year and a half ago. And so the founders have had some time to think about what the exact nature of their product would be, what is the right segment they are targeting, and therefore can think a little bit about what the product market fit would be, and therefore what the resulting economics would look like, right? That's kind of, you're
Yeah.
typically a Series A investor. That's why that you have gone through some of the process of thinking about it, and then you're able to present a coherent picture in terms of what the unit economics would look like. So that's the first criteria. The second criteria for us is to think about how will you exponentially scale this business,
Okay.
right? So that would be not just Google, Facebook ads, but it would be thinking about, have you really identified the customer segment? Have you really identified what the messaging and targeting should be driven at? What is the most efficient way of driving that messaging? And therefore, can you actually give us evidence for green shoots of exponential growth, right? Where you've done micro experiments that can actually show that this product can scale dramatically, right? So
Right.
that's the big aspect. And so that would rule out like operationally intense businesses for us. That would rule out things like which require niches, where product is built out for niches and therefore can only grow to a certain extent and does not have a long tenure growth trajectory ahead of it,
Hmm.
right? So that's the second criteria. And the third criteria is then about the talent aspect of it, right? India in particular benefits from fantastic tech talent, not just the product tech companies that have come out in last, let's say, 10-15 years, but the services
Right.
tech talent that has been here for 30-40 years. On the other hand, India also has massive benefits in terms of financial services talent, right? Banks in India have operated in a professional capacity for a fairly long time. They're not affiliated to individuals and families, but they're affiliated to the larger sector, right? And so coming out of that is a kind of swath of professional talent, but also sort of ways of thinking about financial services that are well institutionalized, right?
Yeah.
So we're looking for founding teams that can benefit from both sides of that house, right? So either the founders come in with those capabilities, or are able to attract that kind of talent to build out the companies they are building, right?
Okay.
So that's the third big criteria. Then there is like always there'll be a long list of other things that we look at, but those are the main criteria. As I said, I had Asia, so right now we don't have a team in India, so I look at every investment individually myself. But we are building out a team, and then that team can kind of progress the process even faster.
Very, very interesting, Sandeep. I'm also sure that operating in India must not be very easy for you, right? So, what are some of the challenges that global investors like QED face while investing in fintechs in India?
See, I think the biggest challenge for any investor coming from abroad and coming to invest directly into India is just understanding the lay of the land,
Right.
and getting to know the nature uh, of activities that happens, right? All the way from the market structure across public sector, private sector, banks, the
Yeah.
regulatory regime that goes on, the context and history around it, the credit cycles that have happened in the country, all the way to thinking about kind of Bangalore versus Mumbai and versus Delhi, and what happens where and why and all of that stuff, right? So it's not an easy landscape for
Yeah.
a foreign investor to come in from that perspective. But let me assure you, getting into any country is like that, right? Like we are making our first few investments into Southeast Asia, and it's easy to say Southeast Asia, but actually Indonesia is very different from the Philippines, is very different from the Vietnam, and so on and so forth. So
Yeah.
getting into any new geography has a lot of nuances. In India, the nuances are higher because the population is large, the country is very large. So there are actually regional nuances within the country which are also important to understand and which are very significant in their own right. For QED, the approach we had and the advantage we had was, one, we were sector focused. So
Yep.
that helped us kind of narrow down the context quite significantly. If I may say so, I think the second big advantage was that I had worked in India for the 5 years before joining QED. So we began investing during pandemic, but I had the benefit of my network already kicking in, and that helped us drive the sourcing a lot more, but also build context very quickly around the verticals we wanted to go deep on
Hmm.
fairly early on. And so that's something I would recommend to a lot of funds who are trying to come into country, and look for individuals who would have the local context already, so you can hit the ground running. The third big advantage we had was, and again, QD is very specific to QD, is the fact that there's a massive capital one diaspora in the
Right.
country already. And that gave us brand recognition to go deeper into the country, but it also gave us talent to pull from when we wanted to think about investing in the country, right? So that, I think, was very specific to QED. I don't know if other investors would have that benefit, given the legacy that QED has. But that puts this kind of the third aspect that held us in very good stead when we entered the country.
Finally, Sandeep, a bit of crystal ball gazing ahead. What do you
Hmm.
think is in store for Indian fintech in the coming years?
Lots of great stuff.
Yeah.
I think there is no there's zero brownie points for making that statement. Structurally, I think Indian fintech is set up very, very well in the years to come.
Okay.
Right, the macro story is strong, the sector story is strong, the talent story is strong. These are three main characteristics that people look for, even from a global investor perspective. India, in particular, and then fintech within the tech sector are both hotspots, right? That will uh, let's say next 6 months will be somewhat of a pain, maybe a year will be a bit of a pain, but after that, I think there are glorious years ahead of us when it comes to fintech in India.
That's very heartening to hear, Sandeep. Thanks a ton, Sandeep, for joining us on today's show. This was a very illuminating conversation for me, especially. In case any of our listeners would like to get in touch with you, what's the best way to do this?
So I'll make the rare exception. So you can always reach out to me on social media. I'm very active on LinkedIn, Twitter
Okay.
less so. But I do respond on Twitter. And then there's always email. It's sandeep@qedinvestors.com. So you can just drop me a line and be in touch.
Excellent, Sandeep. We'll include those details in the show notes. Thanks once
Sure.
again for coming on the show and spending time with us, Sandeep.
Fantastic, and thank you for having me. I'm a big fan of your work, so keep it up.
Definitely. That's it from India Fintech Diaries for this week. Do log on to website indiafintechdiaries.com for exclusive content. We also cover weekly fintech deep dives in a Substack newsletter, so do subscribe to that as well. Until next time, mask on and stay safe.